As we all know, he became a household name really because of real estate, but Truth Social made his net worth more than double last week, in the neighborhood of $5 billion, as you said. But I want to read you something that Forbes reported last week. Truth Social brought in $4.6 million in revenue over the past 4 quarters, less than half that of an average Cheesecake Factory restaurant. So is Truth Social a good business?
Well, far be it from me to go after the Cheesecake Factory, first of all. I mean, I'm a fan. My fiance and I, we go there for date night. It's a good time. It's a good time. But with that said, I would not want to be running a Cheesecake Factory that was losing tens of millions of dollars on that revenue. And Truth Social, which is a tech startup, and as we know, tech startups do tend to lose money for the first years of their existence. Some companies like Reddit still aren't profitable today. They're still losing money. But Truth Social is losing tens of millions of dollars. It's got single-digit millions in revenues. I wouldn't call this the strongest of businesses. And the investor consensus seems to be right now that a lot of the value of this stock is being propped up by a combination of fervor from his supporters and sort of a meme stock energy. We saw this with GameStop. We saw this with AMC. Some of the valuations seem a little sky high right now.
So as you said earlier, his net worth is over $5 billion. Let's talk about those assets that are helping increase his fortune a bit. What are they?
So putting aside Truth Social for a moment, which is by far the biggest jump that we've considered over the past year, he's got a couple of things that are still boosting his fortune under the hood, those more classic traditional assets that Forbes has been valuing for decades. We've got his golf courses. He got 13 courses across the United States and in Scotland and Ireland, and those courses are doing quite well. The golf market is really hot right now. Post-pandemic, there's been a boom in millennials going out to golf. His clubs were already kind of at the high end of the market, and that's boosting those values even higher. And then the second thing I should note is his resorts are also doing fairly well. Doral, in particular, his Doral resort in Miami, has really seen a major increase in its valuation by Forbes. The reason why is we got some new revenue figures for it that came out in combination of his financial disclosures and in that fraud trial. And it's making a lot more money than it used to. Doral is making almost double what it was making in 2019, which is the last year pre-pandemic that we had numbers for it. So I think those things are really the things that are driving his fortune up quite considerably, and that's about $170 million right there between those golf courses and Doral.
Now let's talk about the flip side a bit. What are some of those assets driving his wealth down?
So the story there is really about his office properties. He has 2 minority partnerships in 2 office buildings in New York and in San Francisco. And both of those downtowns still really haven't fully recovered from the pandemic. They haven't rebounded that a lot of folks had hoped. And so, people are still working from home. And so the office market is really just the weakest it's been in a long time. It's not a good time to sell those properties. So that continues to sort of drive the valuations of those properties down. I should also note 40 Wall Street, which is another office building that Trump owns and operates in Manhattan. In addition to suffering from the overall office market not being very strong, 40 Wall Street is also suffering because it has a ground lease that is set to explode in cost for Trump in the early 2030s. My colleague Zach Everson covered this, I think, last week or maybe the week before. It's all blurring together at this point. But all of those office properties together are really dragging his net worth down in that direction.